Good morning, everyone. This is Srikanth Rajan, and welcome back to the Stock Market Podcast from MPIinvest.com. So, coming to stock market, yesterday the markets have been completely kind of volatile till the end of the day. But then at 3 o'clock started that big rally. You should actually open the chart and have a look at the candles. The way the market rallied in the last 30 minutes was just amazing. The way it went and broke the day's high and went again above 19600 and just closed above 19600. So yesterday, if you remember, we had spoken about 19600 being an important level. So at this point of time, what can we infer from that is something that we need to look at this point of time. So what really brought about this change? So yesterday, if you see, the markets were kind of really volatile. Majorly, one reason was we spoke about yesterday was the Bank Nifty expiry changing to Wednesday. So that is something that happened for the first time, and we could see in the last half an hour HDFC Bank kind of rallying, a big short covering rally, in fact, and that kind of led to this huge rally in the market. The second thing that actually led to the rally was the yesterday's top gainer, none other than Tata Consumer, because there were some reports that they are taking almost a very important share in Haldiram's, but then the news has turned out to be fake because Haldiram's has confirmed that there is no such talks going on, and that could kind of probably bring that down today. So that is what we could see. I mean, I'm not expecting the rally to be big again. Like if you remember, just few days back, I was telling you, Indian markets were not looking very oversold, and in fact, we were seeing that, expecting that the Indian markets don't have much to fall. So from there, in fact, markets have rallied up quite well, and it has come to 19600. But then again, I am telling you this time, now there is not much of upside left for Indian market. So at this point of time, I'm not expecting markets to rally much further. We may see some positivity, but then end of the day, markets might not really when or they're not ready to be flying back to 20,000 or higher. So at this point of time, of course, market is going to probably take a break. That's something I expect out of the market at this point of time. So apart from that, if you look at after Indian markets close, what happened in the US market, one very important thing is that, of course, the crude oil prices started going up. Especially yesterday, Saudi has actually announced rate hikes and of the crude, and that is actually not a great thing. So because of which, again, people have started seeing some fears that the crude oil prices going up can again raise up the inflation, and if inflation raises up again, then Federal Reserve may actually continue to increase the rates. So all those expectation of people wherein that Federal Reserve rate hikes are coming to an end, that has kind of confidence is kind of reduced, and now people are expecting Federal Reserve can increase the rates, and that has kind of fueled some negativity in the US market. So that is something which is happening in the market at this point of time, and US markets have closed in the red. Also, there were some stock specific news also. So Apple was down because China kind of banned their officials from using Apple iPhones. They say it's security threat, but whatever it is, China is one country where they don't like their details being monitored by somebody else, or I think there was some news where they had also asked people to defense officials not to use Tesla cars. So China being one of the largest consumers and most populated country, one of the most populated countries in the world, they are one of the largest consumers of also all these tech gadgets like Apple stuff and also Tesla. So with all this, there was a small negativity, and that has been kind of making these things little weak. But in fact, Apple iPhones have not been doing great in terms of sales this season also. Now, along with that, with this higher cut in China sales, probably the people are expecting slight bat. But this is, I'm telling you, a very temporary thing. People will come out of it soon, but this is a temporary fall, I would say. But then what is only thing that I am actually concerned about is the crude oil prices. So crude oil prices going up is actually good for Reliance. So will that mean that Reliance can go up today? That's something that needs to be looked at. But then crude oil price going up is not definitely good for our economy, because India is a big importer of crude oil. So if you see from $80 per barrel level, it has now come to almost 87 barrel. So which is not a great sign. Again, if it hits 90, I hope it does not. But if it hits 90, then that is not going to be a good thing for India at all, because the price going above 90 is always considered very bad. So that is something to be monitored. Why is this price going up again? If you remember, last time when this prices went up, it was when Russia-Ukraine war broke out, and there was supply constraints, and because of which the prices did go up. But now this is more of a artificially created one. Why is it being created? Saudi and Russia together have decided to reduce the number of export barrels export, or they're trying to reduce the export quantity, production quantity, majorly because they want to bring some demand to the market. So that is something which is not good. And second thing, they're also expecting the economy not to be doing great in the upcoming because of the Chinese slowdown. So these could be things which is kind of increasing the prices of the crude oil, which is definitely not good for India. But if that is the case, we need to monitor this closely, because further rise in crude oil prices can put economy like India into trouble. But if you look at a market right now, the mid caps and small caps are the one which is driving the market. Because interestingly, if you see yesterday also FIs have sold for almost 3,000 crores, and the DIs have also sold only, well, a very small amount though. But then, in spite of net institutional selling, why did Indian market rally up last 30 minutes? It's simple. The retail portion is actually going up. Again, retail investors have started coming into the market, and they are majorly investing into the mid cap and small cap. That's exactly why mid cap and small cap rally continues in spite of the index stocks, that is the Nifty 50 stocks, continuing to not perform great. So because if you see, most of the institutions trade in the index stocks, heavy stocks. They don't go to much into, they do, but very small into small cap and mid cap. So that way, at this point of time, the small cap and mid cap is more of driven by, I would say, the retailers, whereas the large caps have already reacted to all these market activities. Now, only thing that we need to look at is when are the retailers going to react to this news. So if at all these crude oil issues and stuff actually come as a fear into the retailer's mind, they also will start selling in the market, and that is when markets can go down. Now, will that happen today, tomorrow, this week, next week? Nobody knows. But then, of course, this is in the offing. So at some time, you could expect that. So these are things which could actually keep markets negative for this point of time. However, since US markets have closed negative yesterday, Asian markets are also trading negative, and also Dow futures are negative. So we are expecting a gap down opening today. But then, very importantly, the levels to watch would be 19,500 level. So until 19,500 level is broken, I would say it is kind of okay. But if 19,500 is broken decisively, then we could probably expect the markets to go bearish. However, today being the first expiry of September, we need to watch how the markets are going to react, and that would actually take care of the upcoming few weeks. So this is the expectation for now. Right now, I am kind of not very bullish on the market, neither very bearish. So it is kind of a neutral kind of situation scenario at this point of time. Let's see how the markets behave, and based on that, we will of course discuss more about how the investment should go. Now, coming to members who are actually not into trading but just investing, I would say get ready with your funds. Probably you should be seeing some opportunity to add into the market at this point of time. So there are amazing stocks coming up, in very good valuations. I would, in fact, personally, I am actually planning to add some more fund into HDFC Bank, because HDFC Bank has kind of taken a support and looks like it's kind of stabilized. Again, this is not a recommendation, but then I'm just sharing my investment plans just for your information. So that's it for now. This is Srikanth Rajan signing off. Until we catch up tomorrow morning, wishing you all a good expiry. Goodbye. Hey, forgot to tell you that. So do press the like button if you love the content that we share before you go. And of course, do share the podcast with your friends and relatives. So see you tomorrow. Goodbye.